Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachordiz, and joining me is Senior Investment Analyst Marios Hadjikyriacos. We'll be discussing the important upcoming ECB meeting and the potential reaction in the euro. So Marios, with the ongoing war in the Ukraine, the ECB has found itself in a very difficult position going into its meeting on Thursday. Can you tell us more about this crisis and what traders think the ECB will ultimately do?
Of course. Hello, Maria. So, to put it very simply, the European Central Bank faces an impossible choice when it meets this week. So, the crisis in Ukraine has produced another crisis, in a sense, for European monetary policy. You've got energy and food prices charging higher. So that means inflation is probably headed higher as well, and it's probably going to stick around for longer than we previously expected. So on the one hand, you've got higher inflation, but on the other hand, you've got slower economic growth because of all the sanctions that we've imposed on Russia. So think about the European consumer. Over the next few months, the average consumer is going to get squeezed because a bigger percentage of their income is going to get spent on necessities, on food, on energy, and so on. So that means less consumption, slower growth. Now, that is an impossible situation for the European Central Bank. You can't really deal with a situation of rising inflation, but slower growth. So the ECB's choices right now, they're pretty horrible. So on the one hand, you can either raise interest rates to fight inflation, but that will also choke economic growth and would raise the risk of a recession. On the other hand, you can delay your exit from stimulus and you can accept a period of higher inflation, which is also not a great choice for the central bank because, of course, their job is to fight inflation. So for the euro, I think that both of these choices are negative. So you can either delay your stimulus exit, that argues for lower yields and therefore a weaker euro, or you can go ahead and try to raise interest rates, but that could be interpreted as a policy mistake. It could backfire like it did back in 2011 for the European Central Bank.
And how might these choices impact the euro in the short and longer term?
Well, in a nutshell, I don't think the ECB can do anything that really changes the euro's fortunes right now. So traders are betting that the ECB is going to go for option number 2. So that means a slower exit for stimulus, just accept that inflation is going to be higher. You can't really do much about it for the next few quarters. Now, here's the catch, though. The European Central Bank wants a stronger euro at this point because a stronger currency would actually help with the inflation situation. It would help to cool inflation down. So they want a stronger euro. Now, the question is, how do you get there? One way to get there would be for them to end their asset purchases. They could signal that QE is going to end completely in the summer, for example. And that is probably the most... the best outcome for the euro from this meeting. Now, that could see the euro spiking higher initially, but I don't think that will last because at the end of the day, what the European Central Bank does right now, it's secondary to the geopolitics. So if they try to boost the euro this week, we might see a positive reaction, but I think it's going to be short-lived because of how dark the outlook has turned for economic growth and so on. Now, the real relief for the euro, so we don't sound overly negative, the real relief for the euro would come from a ceasefire in Ukraine. So the moment we get the headline that peace has been agreed, or at least that the fighting has stopped, that I think will set the stage for a powerful relief rally in the euro. But until then, I wouldn't get too excited about what the ECB says.
Marios, thanks so much. And thanks for joining us at xm.com.